Today we're looking beyond the ledger to understand how artificial intelligence is fundamentally reshaping financial administration. So looking past simple bookkeeping into an era of intelligent automation for expense management and other financial bookkeeping activities. So we'll explore this technology and how it turns tedious data entry into a strategic advantage and provides businesses with insights that were previously very time-consuming to attain. So let's unpack this emerging capability and see where it can benefit small businesses. So in traditional bookkeeping, it's not just in the tedious nature of the work, but it's also a critical issue affecting the business health. So we see three major leaks in traditional bookkeeping. First of all is the time leak, where small business owners can lose many hours, up to 15 hours a month in many cases, sometimes more, sometimes on a weekly basis. Second, the accuracy leak. So simple human errors are quite common and can distort the financial view of the business and the reports that go along with that, and sometimes even provide or make compliance issues a problem for the business. And then there's the insight leak. And this is the strategic layer that we're going to talk about today, because bookkeeping is done in batches quite often. Businesses are always looking backward and making decisions based on historical data. But with the AI, real-time agile decisions are possible and easier to obtain. So this is also an interesting area that we're going to look into in more detail. So when it comes to digital or computer-assisted bookkeeping, we start out with simple automation, so basic rules-based software. So if we make a transaction with a customer, then that falls into a certain category, expense category, and that then is accounted for in the software, and we get the results that are automatically calculated. So then there is machine learning, a much more recent phenomenon, where systems began learning from patterns and adapting to user behavior. But beyond that, so what's the next step then? What we're looking into now is AI-driven ecosystems. So think of these as a digital junior accountant. They're actually capable now of combining machine learning and optical character recognition to provide complete financial intelligence, scanning receipts, scanning invoices, scanning documents, generating invoices and documentation on the fly in real time. So moving a bookkeeping activity from mere data entry to a state of true understanding of the business, enabled by data or digital intelligence. So in this way, it's a significant leap from just a few years ago, when many businesses were using regular software, accounting software, but they had to enter the data themselves and they would get some very basic reports, to now an active AI that is looking at all different aspects of the organization and coming up with intelligence, sometimes on the fly. So the enabling technology of this is intelligent document processing, or referred to as IDP, which in many ways marks the end of the manual data entry clerk role as we've known it for, since all time up until now. Unlike older optical character recognition software solutions that many times struggled with fonts and layouts and other things, the AI can now look at the context of the document as a whole and interpret these little bits and pieces within the document and put that into the context and understand what the document is for, what the receipt is for, what the bill is for, what the transaction is for. So in this way, it can reliably extract the big four data points. In this case, we're referring to the vendor name for the categorization of the expense or line item, the transaction date for accurate reporting, the total amount that is included, including itemization and details, breakdown of tax and other areas, and looking at and being able to then take that information, look at a contextual understanding of what makes that significant, and then connecting it to other aspects of the organization, whether it's reporting or management accounting or summarization of business results and everything that follows from there. So as far as implementation of the ID, we have predictive categorization that assists or enables the process. The AI doesn't just extract data, it learns the business's spending patterns. It can analyze past transactions, recognize recurring patterns, and then even proactively suggest categories for future spending or future expenses that may arise based on business activity. It also applies contextual understanding based on the industry. So for example, a timber purchase for a construction firm is and would be identified as cost of goods sold. For a tech startup, the same purchase is flagged as a potential office improvement. So over time, it can learn the context of the situation and ask, or suggest this looks like a maintenance expense. Should I categorize it? And then, if needed along the way, user can intervene in certain situations. But as the AI learns, it becomes more effective and offers a proactive, intelligent assistance as a key part of the bookkeeping operation. So another key capability of the AI bookkeeping systems is the vigilance. They're capable of scanning thousands of transactions in seconds to potentially flag anomalies that an individual might miss. So in this way, it serves as a tool for fraud prevention and error correction. So for instance, it can identify duplicate invoices where a vendor has accidentally billed you twice. It can also spot spending anomalies, such as maybe a recurring subscription price suddenly jumping 50%. Or as well, it can enforce company policies by detecting expense items or categories of expenses that may go outside of established guidelines. So this ability to continually monitor can help protect the business and maintain financial integrity before costly mistakes occur. So then what is the ultimate goal here? It's more than just about saving a few hours in bookkeeping. The true capability here, the true game-changing capability is achieving live, real-time financial visibility into the organization. So with manual bookkeeping, as in the past, there's always inherently a lag in crunching the numbers, putting it together in a report, and then passing it to management, where there's always a retrospective look. But when a receipt is scanned, in the AI, it's instantly reflected in the digital ledger. So in this case, no lag. What a business owner sees or what the CFO sees is always up to date. So this allows for dynamic decision making, quick pivots on the fly as may be needed. Business owners can see the daily burn rate and runway in terms of financing or capital available in the business, and enables them to then make strategic decisions that can affect cash flow and revenue streams, and help the business pivot in response to changing market conditions or trends or customer situations or other challenges that may arise. So this agility then is in many ways a huge competitive advantage for small businesses in particular that don't necessarily have the resources of having a large team available to track and analyze the financial patterns as they occur. So in terms of transition to an AI system and implementation, the good news is it doesn't have to happen overnight and it doesn't have to happen all at once. So there is a three-step integration path that business can follow. First is to centralize receipt capture. So using mobile apps to scan receipts or feeding the receipts into an AI system, if that step in the manual process is still necessary, this is the starting point. And to be able to take this data from paper format, turn it into digital format is the first step. Second is syncing with the bank feeds. So connecting bank and credit card accounts is also possible with the AI and allows it to automatically reconcile transactions and track expenditures and revenue in real time. And then the third step, the role has to shift from thinking about bookkeeping and financial administration from data entry to an oversight role. So at this point in the implementation, that a business owner or a CFO or a head of accounts would simply be able to review and approve the AI suggestions and spend their time managing only the more extreme exceptions. So this approach then eliminates the old shoebox method of throwing receipts and waiting till the end of the month, putting them all together, and helps to provide immediate financial visibility on the status of the organization. So of course there's a strategic layer to all of this and questions that the business should ask to prepare for implementation and to establish a robust system. First of all is the question of data hygiene. Is the team disciplined enough to capture the receipts immediately? And what are the processes in place? And can this information be pulled in? Is there right equipment or the applications or the apps, the phone apps in many cases, to be able to take an image of the receipt and put it into the system? And is the staff ready to do this on a regular basis? So without the timely data, you don't get real-time results. Second major question is that of compliance, and particularly relevant in well, countries anywhere where there are particular tax laws that would apply to the categorization and the impact of these, to make sure that the AI system is aligned to whatever tax environment or ecosystem that a business is working under. So then there's a question of connectivity and connection with local banks, making sure these systems are in place and the necessary safeguards are also in place to ensure that there's no leak in the system. And then there's the human in the loop aspect of it, to make sure that the individual who is responsible for the bookkeeping understands what the AI system is, what it does, how it works, and where their insight is going to be most necessary, and that they're ready to and sufficiently trained to provide the right kind of insight that would help to maximize the effectiveness of the AI system. So looking at this from a from a specific context, in this case the Malaysian context, it's the country I'm living in right now, and so have had some interaction with this with the Malaysian tax government organization along the way, and also looking at this from a small business perspective and what would be the key considerations. So this same kind of analysis would be applied in any country. And depending on the location, the solutions would be different. But taking a look at solutions like in the Malaysian context, Buku and SQL accounting or auto count are highlighted for their strong LHDN. Again, that's the Malaysian Tax Authority. Invoicing compliance. Very recently, there is new invoicing requirements that have been put in place that businesses have to follow. So these kinds of applications are context specific in the Malaysian environment and offer features like WhatsApp receipt capture and built-in QR code generation, and in many ways ideal for small businesses and SMEs with complex inventory or many small transactions. On the other hand, there are also global players that like Xero and QuickBooks, which offer scalability and cross-border capabilities and would be relevant to a business that carries out activities overseas. So AI features like anomaly detection and conversational agents are also a part of this. So the important thing is to choose a solution that fits the specific context and follows the local rules and regulations, particularly with respect to tax compliance, and to understand the context, whether that's local or whether global global services are also required. So we mentioned this a little bit already as far as the workflow, and going into a little more detail. So of course, traditional bookkeeping is slow manual data entry. When it comes to AI, though, it's now incumbent oftentimes on the employees or the workers to make sure that the information is included in the AI in real time through automated loops or again receipt imaging and other tools that can help along in this process. So it begins with the employee instantly capturing a receipt or an expense item, oftentimes through a phone app. Then the AI reads the details, suggests a category of expense based on the behavior in past situations, and automatically reconciles it with the bank transaction. So in this way, it becomes a live dashboard that can transform financial management from a monthly set of activities and monthly reporting into a day-to-day understanding of what the status of the business is at any given time. From there, then businesses can further enhance their capabilities looking at autonomous finance. So this progression will have 3 stages. First of all, we started in the reactive phase with manual categorization. Then in the predictive phase, where the AI recognizes patterns and can make suggestions. And then the subsequent step is autonomous, being able to characterize by financial forecasting. So AI would use this historical information of bills and payroll to create a accurate forecast that adapts in real time as the business spends and can adjust this forecast on a regular basis. So this capability is unique in that it offloads nearly all the mechanical tasks that a bookkeeper or financial officer would undertake, and offloading all these tasks to algorithms, allowing business leaders then, or these people in these roles, to focus purely on strategy, growth, understanding what the business situation is, and most importantly, spending their time and energy on how to react and enhance the business situation, adjusting the financial policies, understanding what the expenses are, what areas need to be focused on. For example, if there are certain expense items that are growing faster than what the system deems they should be, what can be done about it? That's the ultimate question that now is in the hands of the financial managers, the financial overseers, and the business owners individually. So when it comes to the strategic roadmap or the implementation, how to prepare, there's a three-phase process. First, to assess and prepare. So evaluate the current bookkeeping processes to identify key business challenges and what are the most important areas to focus on first. And second step is to then implement and integrate the AI capabilities with the other data systems or information that can be fed into the system, both financial and as may be applicable product data or sales numbers or inventory and expensive inventory. All these different variables can be brought together to create meaningful insights for the business. And then establishing clear data capture policies for the team to make sure all of this data is captured accurately and on a regular basis. So then the third step in this is to optimize and grow. So part of that would include training of the team to make sure that they understand what the new policies are and in the importance of immediately capturing expenses as they are incurred, or capturing revenue as that is earned, and to effectively shift the focus of the organization from manual entry to strategic financial planning. So the key takeaway here is, in this regard, the shoebox era is over, and the goal of the business now is to keep the data flowing and to use this data to solve business problems. So again, just to emphasize that these systems, although there are a lot of capabilities that can be implemented with AI-enabled systems, but it doesn't have to be done all at once. Start out with the receipts and scanning, and then putting this information automatically into a ledger, and then adding complexity from there. So that is a roadmap, high-level roadmap for the journey. A lot of details that I can possibly cover in other videos, but some amazing potential is made available with the AI and the start of the AI implementation and transition for small businesses. Manual bookkeeping is the thing of the past. So let's see this AI journey. Let's go on this journey together and see where it takes us, and a lot of fascinating things happening in the market. So thanks for tuning in. All the best on the day ahead.